The M&A market, naturally, is affected by the deterioration of capital markets and the real economy due to the coronavirus crisis. Our associate, Dr. Laura Voda, talks about the current situation, COVID-19 impact on smaller companies, and anti-competition legislation. What is, from your point of view, the impact of the current situation in the mergers and acquisitions market?
In the current situation created by the COVID-19 pandemic, there are two major tendencies that we can observe. Number one is the volatility of financial investments, who probably tend to evaporate. And number two, the shift in investable companies is going to change. We can see, for instance, in the technology sector that although the sector is in high demand, such as fintech, for instance, the companies activating in this field are really young and capital intensive when it comes to financial investments. So we wouldn't want to predict a situation where, let's say, good investable companies would be forced into exit due to the unavailability of cash supply. But at the same time, it's a reality of the market, and for us as lawyers, although we estimate an increase in the number of transactions, we need to establish as well the direction where these transactions are going to move.
What is happening with the transactions already ongoing?
That's an interesting question, given that by default in most of the M&A contracts there is a certain clause called the material adverse effect clause. And this material adverse effect clause, call it MAF clause, means that if a drastic change in the circumstances make a certain industry or a certain target industry unappealable for a buyer, then that transaction can be actually revoked. Now, obviously, courts are known to have a very strict approach to the MAF clauses. And we know from practice that in very rare cases, lawyers have inserted a pandemics in an M&A contract. Probably things would change in the future. But in order to highlight that, we would remind a case from the jurisprudence of the courts in the US. It's quite a recent case, 2018, where in one of their leading cases, the courts of Delaware said that in order to justify the material adverse effect clause, a situation would be durable enough, intense enough, in order to make the industry at issue or the market at issue uninvestable or difficult to invest in from the part of an investor, of a buyer, in order to justify the withdrawal from the deal. Although we want to highlight that enforcing the MAF clause is not a small thing, there is an estimation that in the current market, probably the cases where they are invoked is going to be on the rise.
Do you see a new trend post-COVID-19 for companies to acquire smaller companies?
There is a trend, indeed. Companies that traditionally were investable, or the newer technology companies or the new technology companies are going to probably move the trend in that area. As lawyers, we are going to see a higher number of M&A transactions. At the macroeconomic level, obviously there are certain cautious measures towards the foreign direct investment for the bigger deals. We know the case of the European Union that launched such a hypothesis of cautiousness when accepting foreign direct investments. So everything is going to be sooner or later projected into the lower levels. And indeed, in these markets, we are going to see some increase in the number of transactions. We are marching especially on the technology sector, remote transactions, fintech, and blockchain, which would probably lead in terms of investable companies for the future.
Does the current situation have any impact related to the anti-competition legislation?
It does have, because merger controls are traditionally and in many jurisdictions subject to notification. In the current situation, where most of the governmental authorities where such merger controls would need to be notified work remotely, therefore would need to be put at a halt or to be, let's say, developed at a slower pace. Same thing is happening probably with pricing related issues. Therefore, there is a link in between the current situation and the competition-related practices.
Can we relate any of these developments to private equity investments?
Obviously, the private equity market is impacted by these recent developments. And for us as lawyers, we estimate that the number of transactions would be on the rise in agreement with the availability of investments and with the new markets that are going to be developed in terms of investable companies. We do estimate that traditionally this is going to shift towards technology, blockchain, fintech, remote working, but this might not always be the case. But just to answer the question, yes, the private equity market is definitely impacted, and especially nowadays, as a direct effect of the current situation, the most impacted sector would be the one related to the availability of investable funds on the part of the investors.